What's up, everybody? How's it going? Good morning, and thanks for joining me. My name is A.L. Johnson with A.L. Johnson Life Insurance Agency. I just wanted to make a quick video this morning to talk to you a little bit about life insurance, the importance of it, and more importantly, how the policies work. One thing that I've noticed, I've been in the business for, it'll be 12 years here in about a week, and I've helped thousands of people with their life insurance. But one thing that I've been finding here, especially lately, is a lot of people not completely understanding the policies that they have, how they work, what the benefits are. They're just paying for something. And when it comes to life insurance, you pay on that for your entire life. And so I think it's extremely important that we not only have life insurance, but we completely understand how it works. There's a lot of agents out here, more than when I started, like I said, almost 12 years ago, but a lot of them are really uneducated in the business. They don't really understand the policies. They're just trying to make a living. And there's nothing against them, but they are, putting people in a bad spot. And so I want to try to clear some of that up today. If you know anyone that may be looking for life insurance or currently has it and may have some questions, go ahead and share this video with them. Go ahead and tap in. I'm going to get started here really quickly. And so I made a quick little presentation for you guys. I'm going to go back and forth between the presentation. I've got a couple materials here, some things in black and white that I'll show you. And by the end of this, you should have a much better understanding of life insurance, exactly how it works. And if you have life insurance currently, you'll know exactly what it is that you're paying for. And so let me get into the presentation here really quick. And if you have any questions, definitely drop those in the chat. I want to make sure, can everybody hear me? Can everybody hear me okay? Zephyr, what's up, Zephyr? Oh yeah, I'm giving them the truth, bro. I'm giving them the truth. I'm gonna step on some toes today, so definitely. All right, so let's get going here. So the two major types of life insurance, we have term and we have whole life. And anytime you hear about life insurance, you're hearing about the difference, and there's a big debate. Which one should you get? Is term better? Is whole life better? Is cash value wrong to have? Is it okay if your policy terminates? We're going to go through all of that right now. So in this lesson, you're going to discover exactly how term life insurance works. You'll learn how whole life insurance works, which policy type is the least expensive or most affordable that'll fit in your budget the best. And then this is the really important part. What's hidden in the fine details of each policy type? Just like a car insurance commercial or a car sales commercial, you'll hear all the good things. When you look at an advertisement, all of the things that you want to see or want to hear are usually in big, bold print, easy to see. But all of those fine details, the things that are really most important, tend to be in very fine print. And your agent usually doesn't go over that. So I'm going to break those things down for you. Also, what are the most common uses for each policy type? Because both of them, term and whole life, actually have two completely different uses. And so we'll go through that. And then you want to determine which policy is best for your specific situation, because life insurance really is not a one-size-fits-all type of situation. So let's start with the term life insurance. Okay, so when I talked about affordability, term is going to be your most affordable type of life insurance. It's the cheapest. And there's a couple reasons for that. So we'll go through that. But the reason that it's cheap is because it's temporary. And so anytime you hear term insurance, it doesn't matter if it's for me, from a different agent, if it's on TV, if it's on the radio. If they say term life insurance, the policy terminates. That means it's just a temporary policy. Okay, there's nothing wrong with that. But as a consumer, you have to be informed and you have to know that, hey, this policy isn't going to last forever. The policy does terminate. And so knowing that the policy will terminate, the next question that you have to ask your agent is when. When? Because they don't all terminate at the same time. And so you have some policies that will, go in increments of 10, 15, 20, or 30 years. Sometimes they'll go to a specific age, like the age of 65 or 80. But it's extremely important to know that, because at the end of that period, the policy is done. The policy is done. I work with a lot of the funeral homes here in the city, and they can't count the number of times that families have come to them with a policy that was expired, thinking that it was going to take care of their loved ones. One of the big misconceptions, I've had people, pay on a policy for 15, 20 years, and at the end of the term, they thought that their policy was paid up, meaning that after 20 years of payments, they didn't have to pay for life insurance anymore, but that benefit would still be there for the family. And they couldn't be more wrong. They couldn't be more wrong. Actually, at the end of the term, the policy completely goes away. So, am I saying that term life insurance is bad? Absolutely not, because I have term life insurance myself, as well as a permanent policy, but of course, they're for two different situations. And so you just have to be aware of that. When you look at your term policy, you're going to get that for something that's a temporary need, because it's only for a certain amount of time. And so, for example, say if you bought a home, right, and you had a 30-year mortgage. Well, you can get a 30-year term life insurance policy and be comfortable in making that decision, because after the 30 years, the policy is going to go away. But by that time, the reason you purchased it has gone away as well, because in 30 years, you should have paid off your mortgage. That's one example of something temporary. Say if you got a business loan and you have a business partner, and you want to make sure that if for some reason something happened to you, that loan could be paid off, or your portion of the business could be bought out and passed on to your family. That's a situation where you may look at term life insurance, because there is actually a time frame on that loan or on that liability, if that makes sense. And so that's one thing that you want to look at. The other part about a term policy is that the rate may increase. And so just because it's a 20-year term, that does not mean that your policy price, what you pay every month, is locked in for the full 20 years. There are policies that go up every single year. There's policies that go up every 5 years. Again, that's one of those things that you have to ask your agent, or actually go through your life insurance contract to make sure that you have the correct information there. Another point of concern, term policies do not build cash value. And there's a whole big argument on whether cash value is important or not, or if it should ever be purchased. I'll give you a little bit of insight on that in the next section when we go into whole life. But just know that a term policy does not build any type of cash value. Because of that, all benefits stop if a payment is missed. And it goes past the grace period. That varies from company to company. It's usually about 30 days. Some companies will give you 45 to 60, but at any rate, if you stop paying on a term policy, no matter how long you've had it, that policy goes out of benefit immediately. Okay. Now, here's a big one. And I'm going to spend a second here, and I'm actually going to zoom out of the presentation and show you a couple things in black and white. And so, depending on the company, term policies can be converted to a permanent policy. That's a permanent policy that lasts forever, whether you live to be, 85, 90, 100, 105, it's there for you forever. Term policies can be converted depending on the company, or it can be renewed for a longer time frame by paying a higher premium. So let me back out of this. I'm just going to talk to you guys directly here for a second. Okay, so I don't know if you could see this fully here. I'm not sure if you could see this fully, but this is a letter that I actually got in the mail from one of my clients got in the mail. She had a term policy. She was paying quite a bit of money for it, but I'm going to read you what the company sent her because she was close to the age of 80. And you just think for yourself in your own situation, is this something that makes sense and it's something that you would want to face in the future? And so it says here, here's why the exchange option is so important to term customers. Exchanging term life insurance coverage for permanent life insurance lets you enjoy even greater peace of mind when it comes to planning your finances and your loved ones' futures. Here are some reasons why over 500,000 term customers have already chosen to exchange. One is to avoid future rate increases. The second is protection for as long as you live. And the third one is to build cash value. Now, this is where we're talking about the price thing. So with your term policy, say if you get a 20-year term and the policy price is locked in for those 20 years, right? Well, at the end of that, you have the option to renew it. So say if you want another 10 years of coverage, well, what they're going to do is go off of your age at that time. Life insurance pricing is based off of your age and your health when you get it. And so at 20, a policy is much cheaper than when you're 30. A 30-year-old is going to pay less than a 40-year-old, so on and so forth. And so when you get into that term policy, the rate that you get the first time is going to be the cheapest that you ever pay. And then if you go ahead and renew that term 10, 15, 20 years later, you're going to be paying the price based off of that new age, which for most people becomes unaffordable, like in this particular situation that I'm showing you here. And so this lady had quite a bit of coverage. She was paying $173 a month. She had quite a bit that she wanted to leave behind for the family. But long story short, for her to keep the amount of coverage that she currently had, I'm just reading this directly from the company, she would go from $173 a month to $510 a month. Right? Same exact policy, but about 3 to 4 times the price. They gave her another option where she could basically cut it in half for $344 a month, which is basically double. Or she could get a third of what she has right now for $2 more per month. And so this is the part on a term life insurance policy that never gets explained to people before they purchase it. Right? Again, I said term life insurance isn't bad, but you do have to understand exactly what it is that you have. It's really important. So let's move on. We're going to go back into the presentation here. So the last thing, so we talked about the conversion, being able to convert to a permanent policy. Now, some insurance companies do not sell permanent policies. There's a few companies that literally only sell term life insurance. That's all they have to offer. And so in that case, there's nowhere else for you to go. So at the end of your term, they can only renew it at a higher premium, or you just let go of the policy, and from that point, you don't have coverage. And so I'm a broker. I work with several life insurance companies. There's about 13 that I use on a pretty regular basis, and that allows me to find companies that do have that conversion privilege, which is so important. And then the last point about your term life insurance, depending on the company, again, this varies from company to company, but you may have what's called an accelerated death benefit option. And what that does, it allows you to access the death benefit. And so say if you had a $100,000 policy, just for easy numbers, there are companies that will give you anywhere from 50 to 90%, 50 to 90% of death benefit while you're still living if you had a terminal illness, meaning that you had a year or less to live, or a critical or chronic illness. So that covers, heart attack, stroke, or if you were to lose 2 or more of your activities of daily living, such as eating, bathing, dressing, etc. And so it's a really good benefit to have. A lot of term policies have it, but it's one of those things that isn't explained. Make sure that you check your policy if that is something that you have on there and one of those instances happens. You definitely want to be able to take advantage of that. So if we move on to whole life insurance, right? So whole life insurance is permanent coverage. That's coverage that literally can't be outlived. As long as you have the policy in force, it's going to pay out. You could be 80, 90, 100 years old. The policy is there. So it's permanent coverage. Whole life insurance is best used for permanent needs. And so an example of a permanent need or something where you don't know the exact time frame when you'll need it would be funeral expenses, right? Because none of us know when we'll be called home. But at that time, there are going to be some financial considerations. And so whole life or a permanent life insurance policy is what you should consider anytime it's something that you want to make sure it happens and you don't know what age. An inheritance is best left in the form of a permanent insurance policy. Because again, if you want to make sure that your family gets those funds and you don't outlive the policy, it has to be permanent. Okay. Now, whole life insurance is not the most effective form of coverage. And so, if you've ever heard anyone argue against whole life, generally that's the reason. It is more expensive, but that's because the insurance company is indefinitely on the hook. Just a fact, and you can look this up yourself. Term life insurance policies historically pay out less than 2% of the time. The reason being, the qualification for a term policy is much stricter than it is for most whole life policies. And so, if you qualify, generally you're extremely healthy. They don't take very many pre existing conditions with term policies. And so, the likelihood of you outliving the policy is very, very high. That's why they give you so much coverage for so cheap. Well, with whole life, the company indefinitely is going to have to pay out at some point as long as you keep up on your end of the contract. And so, they charge more for that, as well as the additional features, which I'll go into now. And so, whole life policies are designed to gain cash value, and that can be borrowed from without using your credit. And so, I'll do a completely different video on this, but if any of you have ever heard the bank on yourself concept or setting up a family bank or anything like that, you do that with whole life insurance policies. And so, I won't dig too deep into that. It's a little intricate, but that cash value is money that you can borrow from without having to use your credit. So let's say if you had a $10,000 policy, you've been paying on it for a while, there's a couple $1,000s there in cash value and your car breaks down. You can just go directly to the insurance company. They'll cut you a check for the money that you need. And if you were to pass away for some reason and you hadn't put that money back, all they do is subtract it from the death benefit. It doesn't affect your credit or anything like that. The second part is a whole life policy does build equity just like your house. And so you get a mortgage on your home. As you continue to make payments on it, you own a portion of that value. And so even if you were to walk away, you'll walk away with the check. Life insurance, permanent life insurance, works very similarly. Say, for example, we'll use the $10,000 policy example. After a number of years, a portion of that policy is considered paid up. And so if you were to stop making payments, you never made another payment again, the insurance company will still hold whatever that value is for your family. And so you don't lose out. In contrast to term, once the policy lapses, there's absolutely no value left. And so there's just a little bit of difference there. And with your whole life policies, you do, and a lot of them have the same accelerated death benefit option where you can get advanced a portion of the death benefit while you're living if you ever had a terminal illness, critical or chronic illness. So here's a couple of qualifications and other key considerations. And so term life insurance, as I stated before, is much harder to qualify for than whole life insurance. Also, you have to consider the age. You have to consider the age because term life insurance, one, isn't available under the age of 18 years old. And so if you're looking for life insurance for a child, that's going to be a whole life policy. And generally, companies don't want to sell a term policy with that low premium and high amount of a death benefit to people over the age of 70 or 80. It gets really hard to find term insurance at that age. And so that's one of the considerations. Do you even qualify for term, or is whole life the only thing that you qualify for? As I stated before, term insurance historically pays out less than 2% of the time. And so from my point of view, it's best to have your term insurance coverage specifically for those temporary needs that you'll hopefully outlive. Okay. And then whole life insurance is, like I said, it's more expensive. And so a lot of times you can't cover everything that you need with the whole life policy. If you were to do a needs analysis, which means you just kind of sit down, you look at all of your debts, you look at your obligations, how many children you have, what you want to leave behind. When you get that number, say it's 500,000, 600,000, $1 million, for most people, it's unaffordable to get that amount of coverage in permanent. And so what I usually suggest for people, and the state does allow it, for a person to have multiple insurance policies like I have on myself. I have a permanent policy that'll take care of my funeral arrangements and the inheritance for my children. And then I have a term policy that'll take care of any debt that I currently have. Okay. And most people do need a combination of both forms of coverage to make sure that all of their bases are covered. And so when you hear people say, just buy term, never buy whole, I don't listen to that. Don't listen to that. Generally, it's because they work for a company where that's all they have to offer. And it's about them. It really isn't about you. Absolutely, you can, buy term insurance and invest the difference. But if we're realistic about it, that money that you save in investments through CDs or ETFs, etc., you're most likely going to need that money to live off of. That's just the way that it works. Social Security doesn't pay that much, and if you want to be able to maintain the lifestyle that you have when you're working, you're usually going to be tapping into your retirement funds. And so, a lot of times, that money is not going to be the inheritance that you expect it to be. The other thing, we've just seen how the market can fluctuate up and down, and we don't know when God is going to call us home. And so, you really can't guarantee a specified amount to your family through a business. You can't do it through real estate, and you really can't do it through the stock market either, because all of those values fluctuate. The only fixed amount that you can guarantee to your family is through your life insurance policy, and that's why it's so important. So, to figure out which policy is best for you, and I'm about to wrap this up here, but these are the things that you really need to think about. First, as far as your budget, can you afford the premiums that are required to lock in the full amount of coverage that you need through a whole life plan? If you decide that that's the best for you, but you can't cover everything that you need, then you may consider starting off with a term policy. But remember, if you do go with term, make sure that you do have the option to convert it to a permanent policy later in case you need it. The underwriting, that's how you qualify. That's the health questions. Some companies require exams, some don't. But will your health history and your age allow you to qualify for the plan that you want? And so if you want that big term policy for $1 million, that's great. But if you just had a heart attack last year or a stroke, or you're having bouts with your diabetes or something like that, you most likely don't qualify. And so you have to kind of go with what's available for you. The other thing is the purpose of the insurance. Why are you buying the insurance? Okay. Is it a temporary need, such as a mortgage, or raising children, or business debt, something along those lines, or is it something that you want protected indefinitely, like your funeral expenses or whatever inheritance you leave behind for your family? You want to look at the features of your policy. And so, are the cash value and the paid up options that are offered through a whole life or permanent policy, are those important to you? Or are you just looking for pure insurance, without any of the bells and whistles? And in that case, term may be a better option for you. And then again, I'm going to say this as many times as possible through these talks, if you do have term life insurance or you decide to purchase one, please, please, please ask your agent and make sure that you actually have a conversion privilege. Don't box yourself into a policy that you have no way out of, when you're in your senior years. I see it all the time. I'll share one story with you. I actually had a client. She was 78 at the time that I met her. She had a term policy. It expired at age 80. I showed her the contract. She, for whatever reason, didn't believe what I shared with her, and she thought that it was paid up. Unfortunately, she passed away at 81 years old after the policy had expired. It was not paid up. I had several of her family members as clients, and they were upset. They were upset. They took her policy up to the funeral home. It didn't pay out anything. They knew she had been paying on life insurance for 10, 15 years, and they were confused as to why they still had to, come up with money and figure things out with the funeral home. And it was 100% because she had a term policy with no conversion privilege, and no one ever explained it to her. So definitely look out for that. So here's just a couple action steps, because it's good to have information. That's one thing, but until you do something with that information, it's just information. So the first thing that you want to do, if you have life insurance, review your current policies. You want to see what type of policy you have. You want to know how long it lasts, what the amount of the death benefit is, and you want to verify what the ongoing cost is. Will the premium go up as you age, or does it stay exactly the same? Second, you want to review your current and anticipated expenses, just to make sure that you have the total amount of insurance that you need. Okay. And then last, you want to consult with a professional. A lot of us, we'll just kind of ask our friends, hey, what do you have? Who do you trust? And things like that. But unless they have been specifically trained in life insurance, that's not who to ask. You want to ask a professional. You want to ask a trustworthy professional. Everyone that has an insurance license isn't a professional. Um, I'm sure a lot of you know the barrier to entry is fairly low. If you can pass the test, you can get your insurance license, but really that's just the start. You really want someone who's dedicated to the business and really understands all the ins and outs. So you make sure that you're getting the correct information. Um, but that is it for the slide. Let's see. Renee, she said, never thought about life insurance as an inheritance. That's the best inheritance. It is the best inheritance. It's the only one that's really guaranteed. Like you can get a business, it can flop. You can purchase real estate. The market could go down. You can get into the stock market. Those values can go down. But your life insurance is a contract. It's a contract that sticks. And so, yeah, when it comes to your inheritance or whatever you want to leave behind for your family, I highly suggest that life insurance is the tool that you use. And so now, if you guys have any questions, any specific questions, if you need a quote, if you want to understand the policies that you have, definitely inbox me. I'll get you any information that you need. And I do appreciate your time. I'll do another stream here in a couple of days. There's a couple other pieces of information on life insurance that I think you all should really know. But again, I just want to do this to make sure that people are getting the information. Everything isn't about making a sale. Most of the people that sell life insurance, I see them on social media. They don't want to tell you anything. They want you to inbox them or give them a call or get you on some webinar because all they want to do is sell. And I'm here to educate. I want to be a little different in that area. And so if you have any questions, whether you do business with me or not, I'll be happy to help you. Just inbox me anytime. Thanks. Have a good day.